7 videos, and they're like a minute or two long. So I had that. That's always everything done.
I took my mouse quiz. I'm glad he puts tolerance on there. Because if you do it based on, he told us to use table value, like percentage of interest over the years on, whatever recovery we're using. But if you use the actual equation, it comes to 93 cents off from like what the table value is. And the answer was the table value, but because I guess it was tolerance. It's like, man, I'll give you $10. I mean, if you got $10,000, you're pretty good. Talk to your ballpark. I'll give it to you. But if you find out tolerance is too tight, you tell them. This butter's a nice one. Professor Butter. She had this facility planning, technological information, all that stuff. It's like in the far back corner.
Sit there, it's all things you say. And he said he was asking this question. Nobody was answering. One person finally answered. Like profoundly ignorant compared to the answer he gave. So he said, hey, it was just like, so that's just all those things. And he said, since time I give you a long, first quiz. Bob, I'm with the quiz. I know it's from college.
Good morning, and let's start class today. Got emails from text from several people that are live streaming. Amber Vaughn. Cole Blunt. Robert Brown. Alexandra. Here. Say. Here. As you come, live streaming. You pronounce your first name? Alexander, thank you. Justin, Lawrence. Margaret, Judah. Like this. One sitting on here. Nika or something like that. She's from Serbia. So we catch up, she's attended my night class last night. She's a tennis player. And she didn't have a textbook. For the end of class, she was making journal entries better than those who had been there 2 nights before. She was catching up fast. Robert. Ryan. Dylan. Hope. Kelly. Johnny. Jeffrey. Courtney. She's live streaming. Amy Williams is live streaming. Jacob. Josh. Corey. Okay, some folks out. Of course, 3 or 4 text me they were live streaming. And anyhow, what was your last name?
Webster.
What?
Webster.
Webster.
First name Jacob.
Yeah. Okay. And then a couple of guys might be out because of that death the other day of a basketball player that upset a couple of my students in my next class, at least one, maybe two in here. So that was sad. Okay, is everybody fixed up, checking out the textbooks?
A month on month. Month on month.
All right, you got people.
It's also engaged too, so.
Okay, a book is a must. Today makes 3 weeks of classes. All right, I wish everybody could pass this class without a book, but it's not hardly possible. Need a book. Now, how many of you have chapter 1, 100% completed on Cengage? 100%. Okay, I want everybody to have it 100% completed by Monday. That's the deadline. That's all I can give you. Monday. All right. Now you can go into Cengage and complete that assignment without a book, and might not do well on it, but you can go in and complete it. It probably gives you a 10-day or so, whatever free trial does. I think it does. But I sympathize with you if financial aid or some other source is not coming through. I don't see Johnny here. Anyway, Johnny, he said he had to do a lot of work to his car. So it's, what do we put first? He probably needs transportation. Maybe he had to have that as a student worker here. But he still needs a book. We all have problems and things that come up, okay? But hopefully everybody can get a book. Cengage 1 is due Monday, okay? I'm gonna look at it probably Monday evening or Tuesday morning, and I'll take the grades, what is there. Okay, it must be complete. Okay, chapter 2, how many of you have done a lot of work on Cengage? How much do you have completed?
Got all the completed.
What did you make on it?
100.
At 100, chapter 2,
Completed all of it.
that's good.
Got 100%.
100,
So far, I got 78.5.
still working on it.
Like 50%.
Still working on it.
Yeah.
Margo,
I had this right.
finish it all, what's your score on it? Right, okay, the rest of you, take a clue. They're not behind. So chapter 2 must be completed by the end of next week. Because we're starting chapter 3 and we're going to have a test. Not next week, but probably Tuesday of the next week. And I told you, if you fail this first test, I'll count your second test double. I'm going to give you a break there for those who are getting books late and so forth. The what? Probably be the 11th. Let's see. Next week, we could probably have it next Thursday, but I'm going to push you. Today is the 30th. Next Thursday will be what, the 6th? And then that Tuesday would be the 11th, wouldn't it? Yeah. No later than the 11th. No later. I don't think we can have it next week, but the 11th. So let's go ahead and jot down the 11th. But we need to wrap up chapter 1, 2, and we'll be wrapping up chapter 3 by the end of next week. All right. Now, chapter 2. Did we review both problems the other day that I had assigned? 1A and 2A. Now, some of those may be on Cengage. When I did these problems on Cengage, I took them from the book. So, and you do have solutions on Moodle and so forth. So, but Cengage is to do without any help, and it lets you do it over and over and over to make corrections.
is to help you learn. Okay. All right. So we looked at problems 1 and problem 2. Now, the only other thing we're going to practice in chapter 2 is few journal entries. Now, a couple of problems that will definitely be on your test, the journal entries. That'll be 100% on the test. And another problem on the test will be a balance sheet, an income statement, and an owner's equity. Now, all of you didn't have that the other day. I hope all of you have that completed by now. Margot?
Will there be a statement of cash flows on it?
No.
Okay.
We have not went over cash flow, and we will not go over cash flow. We will not be on the test.
I didn't get to understand that on chapter 1 on Cengage.
Now, on Cengage, all right, if you had a cash flow statement that completed on Cengage, don't worry about it. I'll give you those points that it takes off. Okay. All right, cash flow is just something we need to spend more time on and so forth. Yeah.
Can you just repeat one more time? It'll be on the first test. Write it down.
You'll have 10 multiple choice. That's just if you read the chapter, you'll get something kind of equation or forms of organization, partnership, proprietorship, corporation. Those multiple choice. But you'll have 2 definite problems. You'll have about 4 problems. I'll tell you the other 2 later. But 1 problem is journal entry. And 1 problem are those 3 statements. Now, this morning we're going to practice a trial balance. You would go to page 94 in your textbook and exercise 16. Now, they won't balance. They will not balance. You got to plug in cash to make it balance. All right. All right, let's take a plain sheet of white paper. Let's do a trial balance real quick. Now, all 6 accounts want a trial balance. Assets have what kind of balance? All right, they go on the debit side. Liabilities have what kind of balance? They go on the credit side. Capital has what kind of balance? Goes on the credit side. Revenue has what kind of balance? Credit goes on the credit side. Drawing has what kind of balance? Goes on the debit side. And expenses have what kind of balance? Goes on the debit side. Okay, now you know that. So just do it. Try to put them in order. Cash should be first, of course. All right, now here's what a trial balance looks like. Put down your three headings, your 3 lines on your heading, and just draw a line down the paper for debit and credit side, and do a trial balance. Okay, would you come over and share? You mind if you share it too? Okay, no problem. Now, what was your last name? Which one? Oh, yeah, Corey Wood. Right.
So it's options. We have access.
Unearned rent will be a liability. It will be a credit. Will be a liability. Plug in that cash amount. Right now it's zero.
Accounts receivable.
I have one student finished and has the cash balance. She's got 33,000 and how much, Kelly? 120? 320? She's got 320. Hopefully that's your cash account once you plug it in. Say, you get me? Good start on it. All right, that's fine. You folks live streaming, you should be doing this same exercise. We'll get back to class in a couple of minutes. The type of it is on the screen. Might not have it in that order. You just put down debit and credit, you won't have it in that order. It's a credit.
There's revenue or something. Yeah. Okay.
If you go ahead and plug in cash, just make sure your debits equal your credit.
You want your debits to be higher than credits?
One,
Would you want your debits to be higher?
never, so equal.
Every day you hit the credit.
Not equal. That's what a trial balance proves, debit equal credit. Okay, for sake of time, here's the whole thing. If it don't balance, check and see why. Yours balance. Does it ever come out?
That's a problem, that's a balance.
What?
Problem, but it's still a balance.
Your own fault. Okay.
Only $30.
Okay, so. That's why.
Okay, we must go on. Somebody had it finished 5 or 6 minutes ago. A few more have gotten finished and a few more struggling. And anyway, proof of debits and credits, all assets, this thing's not writing for me this morning, but all assets you can see have a debit balance down to land. And accounts payable, unearned rent, notes payable, or liabilities. Capital credit, revenue credit, and then drawing and your expenses debit. And you had to plug in cash. So that is a trial balance. That's important. If you don't get it on this chapter, maybe we'll chapter 3. We got to work. It says unadjusted trial balance. Chapter 3, we're going to adjust it. Well, I want you to know it in chapter 2. All right. But to repeat, chapter 1, Cengage, has to be done by Monday. By next Friday, everybody should have chapter 2, Cengage, finished. Chapter 2, Cengage should have been finished by Tuesday. But by next Friday, everybody should have chapter 2, Cengage, finished. Now, chapter 3, you're going to have to finish that by Tuesday, the test date. So we want you to do all your homework, chapters 1, 2, and 3 on Cengage. And repeat, there is a accounting book on reserve up in the library. And I think you can get on the Cengage on a free trial. Or you can buy a Cengage. It's probably $100 without the textbook. But if you're having trouble with financial aid or some other source that buys your books, scholarships, whatever, you need to go see them and get on to them. This is the third week finished. All right. If your parents pay your tuition and books, I'm sure they've already done that for someone. All right. The young lady that came to class last night, she's supposed to be in this class. She don't have a book yet either, but she picked it up real fast. So forth. But Serbia, I looked it up on a map. It's a little country near Romania, and it used to be, I guess, controlled by Turkey, so forth. So I was interested to see where that little country was located. She speaks 4 languages, and the guy in there from France speaks 5 languages. I'd get them confused myself. I have trouble with one. That's English. But anyhow, your brain is like a computer. It's got unlimited gig. All right? And we were talking last night about how computers change language. You know, words. For example, windows used to be something we looked out of. Apple was something we ate. And so, a chip was something you found down at the cow pasture. A gig was somebody playing at a dance on Saturday night. So terminology has changed. Other terminology changed too. Pot used to be something my mom cooked in. Mary Jane was the girl next door. Weed was something you mowed. The language has changed, hasn't it? And closets, by the way, were made for hanging clothes in, not for coming out of. So language has changed. All right. Now, we need to proceed on to chapter 3. Hopefully you do all your homework on chapter 2. All right, now your homework on Cengage counts for at least a test grade. There's no reason not to get 100 on that. That's some hoodlum you got Cengage and do it over and over and over. And I'll take the scores on that homework Monday for chapter 1. Chapter 1,
Yeah, I couldn't figure
I
out.
wouldn't worry about that difference. Let it round off to 99. All right. But I'll take those scores Monday on chapter 1. Next Friday, I'll take the scores on chapter 2. Okay. And if you don't have chapter 1 by Monday, you got a 0 on it, don't worry about it. But there's 9 other chapters. You can, if each chapter counts 10 points total on average, you can still make a 90 without doing chapter 1. So there's always ways for you to pull up your grade. And 10 points on attendance will pull up 10 points on a low test grade. All right. In this chapter, don't worry about these objectives. That's what we're going to be working with. Now, we've been working with the accrual basis of accounting. That's why you have accounts receivable, and accounts payable. We owe somebody, or taxes payable, or wages payable. We owe somebody. So we're on accrual basis of accounting. And that simply means cash may or may not be received from customers, but you still count the revenue. That means we're following GAAP, GAAP, Generally Accepted Accounting Principle. Now, expenses are recorded not when they're paid. Now, you as a taxpayer on a cash basis. All right, you working anywhere? All right, what about, what do you work? All right, how many hours a week do you work?
16.
60?
16.
16? Okay, it's not too bad. And does anybody work 40 hours a week? Everybody work 40? 30? Can we work 30? All right. But now, I have students that work 40 hours a week, taking 18 credits, 2 kids. All right, you gotta manage your time. Have y'all ever heard of the word opportunity cost? What does it mean?
So you decide to do one thing, your opportunity cost says that you've chosen this one thing, so you can't do another.
All right, your opportunity cost, if you had $100, you put it in the bank and get maybe 1% interest if you're lucky. But if you keep it at home, worried or hid, you're losing that 1%, which is 1% of $100 would be $1 a year interest. That would be your opportunity cost. Now, when it comes to class time, your opportunity cost of sitting here is what? What? You can't be somewhere else. You can't be home sleeping. So your opportunity cost of being here is you could have slept late. Or you could be out working, even if it's for minimum wage. You could be making 8 something an hour. That's your opportunity cost for being here. And what's your opportunity cost of not studying, doing your homework? You know, a bad grade. Because you're watching TV or whatever else you do. Okay? There's always opportunity cost, even with your time. Okay? All right? But you're working, you're a cash basis taxpayer. Let's say you worked last week in December and 16 hours, let's say you made $100. Okay, but you don't get your paycheck to January the 2nd, 2019. It will go on his 2019 tax return, which is a cash-based taxpayer. All right? Now, if he were a accrual-based taxpayer, he'd have to count that revenue in December. Most of us are cash-based, all of us are cash-based taxpayer. It's good. Now, the same thing, if you donate money to a church, December 31st, you can take it off on your tax return, your cash-based taxpayer. If you promise to donate to the church, we'll give it to them in January, it's not deductible, cash-based taxpayer. So we don't worry about cash basis, we worry about the accrual basis of accounting. Revenue recognition principle, that's a principle. And we just recognize revenue, accounts receivable, debit, credit, professional fees. Now get used to revenue being called fees earned, professional fees, interest income, revenue, sales. Revenue has a whole lot of, I guess that's synonyms, okay? And expenses. If you make an expense on December the 31st, it's an expense for 2018, whether you paid it or not. All right, now, do you remember supplies back in chapters 1 and 2? Supplies. You bought supplies, $1,000. At the end of a month, you went out and counted 300 in the storeroom. So how many did you use? 700. Well, that 700, what did you have to debit? Supplies, expense, and credit. That's an adjusted entry. That's what this chapter's about. We'll do more than just supplies. So, but you've already made an adjusted entry. My point is, okay? Unadjusted trial balance has to be, all right, for example, the daily use of supplies would require many entries, a small amount. You know, if we use $5 today, we have to make an entry. $2 tomorrow, we have to make an entry. We don't. We wait till the end of the month to count those supplies and then make one entry, adjusted entry. For example, rent received in advance, unearned rent, expires and becomes revenue with the passage of time. And for example, a company may have provided service to customers that has not been billed or recorded. Then you will make an entry. And that's debit in accounts receivable and credit in revenue. All right, you would never make an adjusted entry to cash. You would never make an adjusted entry to land. You would hardly ever, unless you overlooked it, make an adjusted entry to utilities. But yes, we may make an adjusted entry to wage expense and unearned rent. Maybe sometimes accounts receivable. Not to the accounts receivable, but putting something in accounts receivable. But here's the two big ones on this list. And you look down here, they say yes to B part, but it's hardly ever. They say yes to E part, but it's hardly ever. All right. The two types, everything in accounting has a reverse. Accrual and deferral has reverses. If one person has accounts receivable, what does the other person have? Accounts payable. If one company has a sale, another company has a purchase. All right. So that's what accruals and deferrals are. On the accrual side, revenue has been earned, no journal entry had been made, the adjustment data, you've got a debit accounts receivable and credit revenue. That's an accrued. All right, expense has been incurred, no journal entry been made, so you've got a debit and expense like tax expense, wage expense, and credit a payable. All right, so that is your accrued revenue and your accrued expense. And we're going to have reverses of those, and that's the deferrals. All right, looking at a couple of those, cash has been received for revenue that will be earned in the future. Somewhere you made a journal entry of debit cash and credit unearned revenue. And then when it's earned, you debit unearned revenue and credit revenue. That's a deferral. Now, does anybody in here pay rent in advance? All right, but you pay insurance in advance. That's prepaid insurance. Okay. Now, this company would have, the other company would have credit cash and debit prepaid rent or prepaid insurance. All right, a prepaid item is the reverse of that. All right, so you debit prepaid expense and credit Wait a minute. Something's wrong with this entry. You prepaid insurance and credit cash, and here you should debit, uh, debit your insurance expense and credit your prepaid insurance. And we need to practice a lot of those. All right. Now, wages owed but not yet paid. Somebody look at what's your answer up here. All right. Anyway, what is your answer up here to A part? Wages owed but not yet paid. That'd be a what? Which one? 1, 2, 3, 4. 25% change. All right, that would be an accrued expense. Supplies on hand would be a prepaid expense. Fees received but not yet earned, that would be an accrued revenue. Fees earned but not yet received. Wait a minute. Fees earned but not yet received. That would be your accrued revenue. Fees earned but not received. All right. Fees received but not earned would be 3, not 3, but 2, unearned revenue. Okay. Here's your unadjusted trial balance. Now this figure may change. Supplies might change. Insurance might change. Unearned rent, fees earned. A wage expense, any of these other expenses could change, but usually it's wages, supplies, rent. They may change. Now, on an adjusted trial balance, you may have to add some expenses. Now, one, for example, is depreciation. We're going to make an adjusted entry for depreciation. All right. You know, these are expenses. But now, when you bought office equipment, land appreciates, it goes up in value. But office equipment deteriorates. Your laptops deteriorate. So what is depreciation? What? You lose value of product over time. For what reason? You drive it, don't you? So you buy a new car, you pay $30,000 for it, you drive it a week, and you get 30 back out of it, it depreciates. All right, you bought a new laptop computer. Does it depreciate over 3 years? It may become obsolete. All right. Computers depreciate fast. Windows 10 may soon become obsolete. Are they ready to come out with a Windows 11 or 12? And then how about these cell phone companies? They keep coming up with new cell phones. Back when I was your age, I had to walk to a telephone. There was not even a telephone up in the Holler Creek or Fort, where it was I lived in. Called it Creek. Anyway, we had no phone service, so I had to walk a mile or so to pay phone, pay a dime to call somebody. Okay. So how far is the telephone? Now, you see pay the telephone booths anymore. They're almost obsolete, aren't they? Telephone booth. And your cell phone, it started out, you can make a cell phone call. Then they added a camera to it. Then they added internet to it. And you know, your cell phone does a lot of stuff, don't it? They added calculators and calendars and maps, and you do a whole lot with your cell phone. When I went to Detroit, I depended on my Google Map. And this there was a detour or something, picked up most everything. So, but it's really a help when you travel. I used to have to take an old paper map, mark my way, okay? So things have changed. All right, depreciation then. Equipment, computers, cars, they all depreciate. All right, like us men, we depreciate. Now, you ladies are like land, you appreciate, you go up and back. Land goes up and back, okay? All right, we'll worry about depreciation later. It will bring it up here. Now, here's your chart of accounts. And we're going to have to add some things to that chart when we do adjusted entries. Gosh, I'm going the wrong way or something. All right, we're adding accumulated depreciation, which is a minus asset. Now, this asset will have a credit balance because we got to subtract it from equipment. All right, we're adding another payable here, and we're adding rent revenue over here, and we're adding insurance expense and depreciation expense. So the chart of account grows a little bit after we do adjustment.
So account, that's a credit. Are the other ones debit?
The other ones are okay. These are all credit. These are all credit. These are all debit. This is the only one that has a contra account. A contra account you subtract has to have an opposite balance. All right, assume that Net Solutions signed an agreement on December 15th to provide service at a rate of $20 per hour. Net Solutions had provided 25 hours of service at $20 an hour, which equaled $500. So Net Solutions, somebody owes Net Solutions $500. So that's called an adjusted entry. Debit accounts receivable and credit fees earned. But you made these entries along the way. It just was not called an adjusted entry if it's in the middle of the month. Last day of the month, it's an adjusted entry. Now, if you omit that adjusted entry, what would that do to your accounts receivable? It would understate it by 500. What would that do to your revenue? It would understate it by 500. All right, now here's an expense. All right, bi-weekly. How often is bi-weekly? What? Every 2 weeks? Would you rather make $1,000 bi-weekly or $1,000 semi-monthly? Bi-weekly. Bi-weekly, you'd have 26 paychecks. Semi-monthly, you'd have 24 paychecks. All right? Bi-weekly is every 2 weeks. Semi-monthly is twice a month. Some months have more than 28 days in them. All right, so they pay wages $950 on December 13th, $1,200 on December 27th. As of December 31st, they owe $250. They're not going to write out a paycheck for that because it's not payday yet. So they'll debit wage expense and credit wages payable. Now that's your accrued by debiting accounts receivable and crediting revenue. And that's your accrued expenses. That's two adjusting entries, accrued revenue, accrued expenses. And when you pay this $250, you've got to debit wages payable, let's say in January. So your real wage expense for January is $1,025, but your check is for $1,275. You got to pay what you owed in December. Now we can look at a calendar and figure out accrued wages also. We'll save that. Now, if you don't make this entry, your wage expense is going to be understated by $250. Your liability is going to be understated by $250. And if you understate your wage expense, you're overstating your net income. Now down to unearned revenues. Okay. It indicates that a balance in the unearned rent amount of $360. This balance represents a 3 months rent. Well, what is 3 into 360? 120. Now we've earned 120 of that. So take it out of unearned and put it in rent revenue. So this is your unearned revenues. Now, some of our students are staying out at the motel out here. They pay their rent in advance. The international students only has to pay half their rent, and I think their sports scholarships pays the remainder. Unearned fees, fees earned. Unearned rent, rent earned, still revenue. Fees earned, still revenue. And prepaid expenses. All right, we had the accrued revenue, accrued expenses, we had unearned, and now we got prepaid. That's 4. Depreciation makes 5. 5 kinds of adjusting entries. All right, and we know about supplies. We had 2,000 available. We've only got 760 left. We got 1,340 in expenses. And we know that entry because we made it before, didn't we? Supplies. You'll do the same thing for supplies as prepaid. Insurance may be prepaid. Rent might be prepaid. If rent is prepaid by you, it's unearned by the other party. Insurance expense debit, credit prepaid, adjusting entry. All right, now fixed assets are your plain assets that we depreciate. And that might be building and equipment. We don't depreciate land. So you pay your salary expenses during that month, but your equipment, what you used up, you don't record depreciation every day. You don't record supplies expense every day. We do it at the end of the month, just an entry. And we will have a chapter. Now here's that contra account I'm telling you about, which is accumulated depreciation. It's a contra account. And on our balance sheet, we will subtract accumulated depreciation from those fixed assets. Some books call them long-term assets. Some call them fixed assets or permanent assets. Well, here's your entry for depreciation. We won't worry about calculating it because we have a whole chapter on depreciation later. Whole chapter. The difference is the book value. Now, if you took cost minus accumulated depreciation, gives you book value. Now, the book value of your car is $8,000, and it cost $17,000. Then you know it's depreciated $9,000, right? But you're in trouble if your car's worth $5,000 and you owe the bank $7,000. That's bad, isn't it? That long-term financing of 6 or 7 years will get you. Now, you need to record depreciation is a good expense. You know why? You don't pay cash out for it. It reduces your net income. You pay taxes on your net income. So depreciation will save you taxes. All right, now here's a wrap-up summary. It's in your book. Your accrued expense, your accrued revenue, your unearned revenue, your prepaid expense, and your depreciation. 5 kinds of journal entries to adjust that unadjusted trial balance. That's why I wanted you to get used to doing an unadjusted trial balance. And there's only one person here that I do believe that knows that trial balance, and that's Kelly in the back. Okay? Now, she knew it well. The rest of you, in some form or another, struggle a little bit to get that trial balance. All right. You'll have some adjusting entries on your test. That'd be the third problem. On your test coming up, you'll have some adjusting entries. They have to be posted, of course. Then we do the adjusted trial balance. Now, from that adjusted trial balance, now we can do our income statement, our balance sheet, and our equity capital statement from the adjusted trial balance. All right, we just pick out revenue. We have fees earned and rent revenue. So we have 2 revenues put on the income statement. Subtract all the expenses, get net income. All right, and then we have beginning capital, add net income, minus drawing to get your capital. Then do your balance sheet, your assets, your liabilities, and your ending owner's equity, not your beginning owner's equity. So we need this statement to do our financial statements from. There are 4 official financial statements in the accounting world, and that's the income statement, the capital statement, and the balance sheet. And the one we're not doing is cash flow. We'll do it later. I have a whole chapter on cash flow when you can learn it well. You got too much to learn. And that's why I'm not throwing in a cash flow statement to learn, okay? You've got too much already. All right, just more examples. Now, a vertical analysis, which way is vertical? All right. All you're doing vertical here is taking fees earned as 100%, dividing that by each one of your into each one of your expenses. Here they just lumped expenses together and so forth. But I'm not worried about vertical analysis or horizontal analysis either on this test coming up. I'll tell you exactly what's going to be on the test. You already know 3 problems. All right, and we'll add 1 problem later. Okay, now that's the PowerPoint presentation for chapter 3. Now it's up to you to read it. And there's no additional assignment. You have plenty of them. Chapter 1 should have already been finished. Chapter 2, you still got the end of next week to finish. Chapter 3, you got to Tuesday, the 11th to finish. So you know your progress there, what you need to do. Now, you need to read this chapter for Tuesday, chapter 3. And we'll work and practice on the adjusted entries possible on Tuesday to get you doing adjusted entries. But now you need to know how to do the regular journal entries too. So that's why I want you to do your homework. So I'm gonna let you go today. Have a good weekend. And please try to get a book. Please try to get caught up. And if it's hard for you, too much homework, don't be a quitter. Anybody can quit. What's that saying when the going gets rough, tough to get going or something like that? Accounting is not easy.
Don't pray for extra time, pray to be stronger.
I guess. Good.